Dan, welcome. Good to have you with us. We know they're talking about inflation. What else could be on the agenda?
Yeah, so inflation is the backdrop to these discussions. And if you think about where both of these men stand right now, President Biden's approval rating hit the lowest level of his presidency over the weekend as inflation concerns build. And for the Federal Reserve Chairman, he really risked being one of the few Fed chairs that let inflation genie out of the bottle. So both of these men have the incentive to get in a room and figure out how to solve this problem. I think much of the commentary today really kind of missed the point of what's happening. We have these dynamic economic issues that are in front of us that could exacerbate inflation. So, for example, the European Union banning Russian oil could have the effect of raising oil prices. You also have Chinese tariffs on the agenda. The president said he's going to review those tariffs. Secretary Yellen has been pushing to reduce those tariffs. Let's just say the president wakes up tomorrow and says, I'm going to get rid of those tariffs. You're going to want to know how the Federal Reserve is going to respond to that type of change. In fact, in 2018, it was a big problem for the Trump administration as he was raising tariffs. Powell kept interest rates higher. So there's going to be that interaction. And I think the big issue, and Kayla just touched on this in the introduction, is that the Democrats are getting closer to a deal on what I call Build Back Smaller, which will include tax increases. Now, think about this. What is the Fed chairman going to say on how tax increases impact monetary policy? So increasingly, we have monetary and fiscal policy interacting. We have a set of issues that have risen to the level where both men need to get in the room and figure out how these issues are going to be impacted so we have a more coordinated policy. That's why I think today's importance are very, very important.
Well, you've laid a lot on the table there, Dan, and I'm going to have a hard time getting through all of it.
Okay.
I guess on the face of it, if there are lower taxes on China, that would be disinflationary, wouldn't it?
Yep. Well, it could be in the short run. But if you remember what happened with President Trump, when he started raising tariff rates, the Fed kept interest rates high and financial conditions tightened. So it may actually have the opposite effect because it may actually be more inflationary by improving economic growth. Now, we just don't know. I don't think the president knows. And I think the president's trying to understand where the Fed chair stands on that if there's going to be a policy decision. Ultimately, I think the Fed is going to want lower tariffs, very similar to what Treasury Secretary Yellen wants, and that will be an important input to their interagency process in deciding how to move forward on tariffs.
And if behind the curtain, the two men are talking about the possibility of higher income taxes or some kinds of taxes domestically, if you have that working at the same time as higher interest rates and quantitative de-easing, you've got three fairly powerful disinflationary forces, number one, and also impediments to growth, right?
Yeah, but I would treat the tax increases very differently, Tyler. In 1968, the idea was we'll raise taxes on corporations and high-income individuals and stamp out inflation. We got lower growth and we got higher inflation. In 1993, there was a meeting just like today between Bill Clinton and Alan Greenspan, and they didn't want to explicitly say it. But out of that meeting came the idea that if you raise taxes, the Fed wouldn't have to raise as much interest rates. We raised taxes, we got slower growth, but we still had the inflation. And as you know, the Fed had to aggressively raise interest rates in 1994. We need to be very careful on the tax increase side. The belief that that has reduced inflation not bared itself out in history and could actually lead to a slower economy and raise that recession risk that's currently out there.